Welcome to your deep dive. Today we're all about decoding the world of investing, you know? You sent over this really cool article about cryptocurrency and stocks, how they stack up against each other, and we're going to break it all down.
Yeah, it's like we're on a treasure hunt. We're going to sift through all the financial stuff and find those golden nuggets, those insights.
I like that. But just to be clear, right, we're not giving financial advice or anything. We're just kind of exploring and unpacking this article.
Exactly, yeah. Think of it as a crash course, just wrapping your head around the differences and what's out there.
Okay, so the article starts off by defining stocks in cryptocurrencies. And I think I get the basics. Stocks, you own a little piece of a company, right? And crypto uses that blockchain technology.
Right.
But I guess what makes them so different as investments? Maybe that's a silly question, but
No, it's a great question. It's all about their DNA.
Yeah.
Really. Stocks, they're like the veterans. They've been around forever, have all these practices and regulations behind them.
they've got the experience.
Exactly. They're the blue chips.
Yeah.
And you've got the SEC making sure everything's fair, transparent.
So it's kind of like comforting knowing there are rules. Someone's watching out for you.
Absolutely. Crypto, no, that's a different story. That's like the rebellious teenager, right?
Yeah.
Tons of potential, but still figuring things out as it goes.
And that's where the volatility comes in, right? That's what everyone's talking about.
Exactly. Excitement, innovation, but yeah, volatility.
Yeah, volatility, the word that makes every new investor a little queasy. The article mentioned Bitcoin, how its price goes up and down like crazy.
Oh,
You can
yeah.
make a fortune or lose it all overnight.
That's the thing. It can be a wild ride. And that's why before you even think about investing in either, you have to know your risk tolerance. It's like, are you playing it safe or are you going for high risk, high reward?
Yep.
Stocks, especially the established companies, they're somewhere in the middle. They fluctuate, yeah, but not usually too dramatically.
Right.
Crypto, though, that's usually leaning towards the high-risk side. It attracts two kinds of people, the ocho dealers. We've probably all heard that term. They're in it for the long haul, and then the day traders just trying to make a quick buck.
Okay, that makes sense. But let's unpack this Ocho deal thing for a minute. I get holding on to a stock long term if you really believe in the company.
Right.
But holding on to a cryptocurrency when, it could lose half its value overnight.
It takes guts.
It does.
It's more than just holding on, though. HO dealing it's a whole philosophy, really. It's this belief that crypto and that technology behind it, the blockchain, that it's going to, revolutionize everything about money.
Wow.
So they're buying into a vision of the future, even if it's future that's, still being figured out.
So it's less about the actual coin or token, more about the tech behind it.
Exactly. They're betting on disruption. Now, not every crypto investor is a die-hard HO dealer. We talked about those day traders, right? Volatility is their game. They live for those short-term price swings.
So with stocks, it's like you've got this established market history you can analyze, right? But crypto, it feels more like uncharted territory. It's all about tech and vibes. I don't even know.
That's a good way to put it. And that's exactly why diversification is so important, in both worlds, actually, but for totally different reasons.
Diversification, that's investing 101, right? Like, don't put all your eggs in one basket. But how do you even diversify within these two very different markets?
You hit the nail on the head. It's how you diversify that matters. With stocks, you spread your investments around. Different sectors, tech, healthcare, energy, that kind of thing.
So if one does badly, your whole portfolio doesn't go down with it.
Exactly, like a safety net. Now with crypto, it's a bit different. You'd spread it out over various cryptocurrencies. You want different uses, different tech, different risk profiles.
So instead of betting on one horse, you're betting on, a bunch of different horses.
Yeah, you got it. But that's where the research comes in. You got to know what you're getting into, especially with crypto.
It's a lot to take in.
It is. But before we go too far into picking investments, whether we're talking stocks or crypto, we got to talk risk. The article really emphasizes that.
Right. Risk. It's like, if it sounds too good to be true.
It probably is,
Yeah.
especially in finance. It can be, yeah.
Yeah.
Risk is everywhere in investing, right?
Yeah.
It doesn't matter if it's stocks, crypto, whatever. It's like before you even set foot on the trail, you got to know what you're up against.
So what are some of those potential, pitfalls we should be looking out for? I know the article mentioned market risk, but I don't really,
Market risk, it's the big one, the one you can't control. Think of it like the tide going out. It can pull down even the strongest swimmers.
Oh, wow.
That's why diversification is so important, right?
So it's not even that a specific company is doing badly or whatever.
Right.
It's like the entire market takes a hit.
Exactly. The dot-com bubble. That's a perfect example.
Right.
Recessions, interest rates, all that can tank even the best companies.
Hmm.
And then you've got company-specific risk.
Right.
That's tied to how the company's doing, not the whole market. Bad management, new competition, stuff like that.
But you got to look at the big picture, like the whole market.
Yep.
But then also zoom in on that individual company.
Exactly. Now, with crypto, it's a whole other ballgame. We already talked about volatility, right? That's a given. But regulatory risk, that's a big one.
Because it's so new and they're still figuring it all out.
Exactly. Governments are trying to figure out how to regulate it, which means like new rules pop up all the time and bam, things change overnight.
So it's like aiming at a moving target.
Pretty much. A lot of investors, they don't like that uncertainty.
Right.
Then you got security risks. Remember those digital wallets?
Yeah.
They're basically your bank account for your crypto.
Right.
And hackers, they love them.
Oh.
So you got to be extra careful with crypto, even more than with your bank.
So it's like double checking everything, being super careful.
Absolutely. Use a good wallet, strong passwords, and watch out for those phishing scams, those fake emails.
Oh, yeah.
Like protecting your treasure chest.
Right.
You want it to be Fort Knox.
Right. Okay, so we talked about all the scary stuff, the risks. But let's say someone's done their research, they're feeling brave, ready to start investing. Where do they even begin? How do you go from like reading about this stuff online to actually picking what to invest in?
That's the million-dollar question, right? So for stocks, the article mentions fundamental analysis. It's like before you buy a car, you check the engine, the mileage, all that, right? You're making sure it's worth it.
Right.
It's the same with companies. You look at their finances, their earnings reports, all of that, seeing if they're actually doing well, if they've got potential.
So it's like not just the sticker price, but like what's under the hood, what's actually driving the value.
Yeah. You're looking for profitability, efficiency, all those good things. There are these things, earnings per share, price to earnings ratio, we call it PE, and then return on equity.
Oh, okay.
All these clues to tell you if the company's a good investment or not.
And those numbers can tell you if it's like overpriced, underpriced.
Exactly. Like a high PE ratio, it could mean investors are really excited about the company, think it'll grow a lot, but it could also mean it's in a bubble. Low PE, maybe it's undervalued, overlooked, but maybe there's a reason for that. And remember, numbers are just one part of the story.
Right.
You also got to look at the people running the company, their competition. Are they innovating?
So it's like reading a travel brochure is one thing, but then actually going there and seeing it yourself.
Exactly. Numbers give you the framework. The rest is up to you.
Okay, so you've got your numbers. How do you actually like buy and sell stocks?
That's where technology comes in. Online brokerages. They've made it so easy. But choose a good one, understand the fees, and don't get carried away.
Right.
Now, let's talk crypto. Let's say someone's interested, but there's like a zillion different cryptocurrencies, right?
It's overwhelming.
It can be. With stocks, you've got companies, history, all that. Crypto is. It's the Wild West out there. So first things first, education. Before you even think about buying Bitcoin or whatever,
Right.
you got to understand blockchain, how crypto works, what affects the prices. Don't just follow the hype.
FOMO into it, basically.
Exactly.
Yeah.
You want to find those projects that are actually doing something, right? Look for a good team, actual progress, people actually using it.
Right.
Read their white papers, understand the tech, be wary of anything that sounds too good to be true.
Because there's a lot of that in the crypto space,
Yeah.
right? Those guaranteed returns, all that.
Scams. Always be wary. Remember, it's new, and a lot of people are just trying to make a quick buck off unsuspecting investors.
Gotcha. So trust your gut.
Always trust your gut. Now, remember how we talked about regulations always changing? That's why you got to stay informed. Read the crypto news, follow the SEC, and be ready to adapt because things can change quickly.
So crypto's a little more high maintenance than stocks.
In a way, yeah. Speaking of which, let's talk security. Those digital wallets, they're super important.
Because if someone hacks your wallet...
It's gone. No getting it back.
Oh, wow.
So choose your wallet carefully, use strong, unique passwords for each one, don't reuse them, and watch out for those phishing scams.
So many scams.
Right? Think of it like a different key for every single door in your house.
Got it.
Okay, so we've talked a lot about the downsides, but let's end on a positive note. What are some common mistakes investors make so our listeners can avoid them?
Yeah, good idea.
Mistake number one, letting emotions get in the way. Fear, greed, all that. It can make you do dumb things.
Like buy high, sell low, kind of dumb.
The worst. Stick to your plan even when it gets scary. Another one, putting all your eggs in one basket.
We talked about that diversification, right? Yeah.
Exactly. And don't expect to get rich quick. Investing is a marathon, not a sprint.
Slow and steady wins the race.
Now you're getting it.
This has been amazing, by the way. I feel like I could teach a class now, but we should probably start wrapping things up. And we're back for the final part of our deep dive into stocks and crypto. It's been a wild ride. We've covered so much ground, from the super basic stuff to like actually picking investments.
We have, but things never stay still for long, especially in finance. It's all about change, right?
It's true. So looking ahead, what are you like keeping an eye on? What trends are you seeing, stuff that's got you excited or maybe a little nervous?
One thing that just blows my mind is how much tech is changing finance. I mean, we've got these online brokerages, robo-advisors popping up, and then, of course, crypto. That's all tech. But I think we're just getting started.
It's like the whole system's getting this tech makeover.
Exactly.
But what does that even mean for regular investors like me? Are we all going to need to learn how to code just to manage our money?
No, no, not at all. I think all this tech, it's actually going to make investing easier, more accessible. Like, have you heard of fractional shares?
I think so.
Basically, it means you can buy like a tiny piece of a really expensive stock.
Yeah.
So you don't need a ton of money to get started.
Oh, okay, that makes sense. So it's opening things up, making it possible for more people to invest.
Exactly. And that's just one example. Blockchain, too, that's going to be huge. And not just for crypto.
Right, it's for everything. I've heard that.
It could change supply chains, how we verify our identity online,
Oh,
even
okay.
voting. Creating these systems that are super secure and transparent. That's the power of blockchain.
Wow, okay. It's like blockchain is the new internet.
It really could be.
But I mean, it can't all be good, right? There've got to be some challenges too with all this new stuff. What are some of the downsides?
Yeah, you're right. One thing that worries me is systemic risk.
Systemic risks.
It's like as everything gets more connected, more complex, if something goes wrong in one place, it can ripple out and affect the whole system.
Oh, okay, like a domino effect.
Exactly. And we've seen that happen before, haven't we? Those risks are real. We need ways to manage them, and we need to really understand how it all works together.
Makes sense. What else keeps you up at night thinking about the future of all this?
Cybersecurity.
Yeah.
Definitely cybersecurity. Our whole financial lives are online now, which makes us targets, hackers, data breaches. That's the stuff I worry about.
Right, because it's not like you can just call your bank if someone steals your crypto.
Right, exactly. You're on your own. So we all need to be really careful about security, both individuals and institutions. Strong passwords, good digital hygiene, that's more important than ever.
So it's like we're building this amazing financial superhighway, but we need some serious
The
guardrails.
best guardrails. Otherwise, it's a free-for-all.
Yeah, scary. So to wrap things up, what's the one big thing you want our listeners to take away from this whole deep dive?
The world of finance, whether it's stocks, crypto, whatever,
Hmm.
it's never going to stop changing. That's the one constant. But that's what makes it exciting.
Right.
So be curious. Keep learning. Don't be afraid to challenge the way things have always been done.
Wise words. Expert speaker, this has been incredible. Thank you so much.
Anytime. I enjoyed it.
And to everyone listening, thank you for joining us on this deep dive. We hope you learned a lot, maybe had some fun along the way. Remember, investing always has risks, but with a little planning, some good research, you got this. And until next time, happy investing.